The financial assets that we want to tokenize are already highly regulated. And the thing is that stablecoins emerged in a regulatory void.
Your guys' ultimate goal is to create a new type of reserve currency. How do you plan on accomplishing this, and how will you win?
We were originally inspired by Bitcoin and concluded that Bitcoin might be too volatile in the long term. And so the big idea behind Reserve is...
Talk to me about this natural progression of things.
So we're working on trying to coordinate the industry to come up with a system that makes it so that you can end up with tokens that are more freely tradable because...
Awesome. Another pod, excited to be here, or to continue here at Token 2049. I always like to start off my founders with a bit of a difficult question. So your guys' ultimate goal is to create a new type of reserve currency, a new type of store of value. How do you plan on accomplishing this, and how will you win?
Yeah, totally. So we were originally inspired by Bitcoin and essentially concluded that Bitcoin might be too volatile in the long term because we think gold is perhaps too volatile in the long term to use as a reserve currency. We think the dynamics are similar. And so the basic idea, the big idea behind Reserve is when people want to store any meaningful amount of wealth or value, they tend to diversify, right? That is sort of the simplest and most consensus tool for dealing with volatility is diversification. And so we thought to ourselves, well, why not make an index of like all the world's assets and use that as the reserve currency? Because in a sense, that's what the world has already chosen to do, right? We haven't turned that all into a single token so that you and I can exchange it, but everyone is holding a diversified basket of assets already anyway. And so, that's the basic idea behind Reserve is we want to create what we call asset-backed currency, an index of all the world's assets. And it's a long road to get there. We're building a bunch of tech and, governance stuff and waiting for everything to be tokenized and all that. But that's the ultimate goal.
So a kind of universal index is a way to think about it. I know you guys are starting off, or maybe not starting off is the right word, but recently have launched an on-chain index product called LCAP. Right now, I looked up the stats before the podcast. I think the biggest index product is, or maybe all of the index products in crypto are still low single-digit billions. Meanwhile, the biggest single index product for equities is about 700 billion, and index products represent about 20% of total stock market cap. So there's a massive opportunity, obviously, in crypto.
Absolutely.
Why doesn't this product already exist?
Yeah, it's a good question. So I think that as the market matures, you get to a point where there's a larger and larger number of assets that people on a massive consumer and sort of normie scale will be comfortable holding, right? It's like right now, it's basically just Bitcoin. Like if you talk to financial advisors in the US, most of them are not allocating to crypto for their clients. Right. And the ones who are, it's almost exclusively just Bitcoin. And so in that situation, it's like, well, you don't really need an index because there's only one asset that, large amounts of wealth actually trust. But as that number grows, as the industry matures and people start to feel like, okay, actually the top 20 or the top 50 or the top 100 makes sense to hold, then it just starts to, be reasonable to do the same thing that we do with the S&P 500 index, which is that largest index product in TradFi, of buying bundles instead of buying a single asset at a time, right? It's like why do you buy the S&P 500 index? You could go out and buy all 500 assets. That's like extremely cumbersome. So no one's going to do that, right? And so so we just think that it's pretty much inevitable that as the crypto market matures, people will hold more and more of these assets in some sort of index or fund type format. We see an interesting pattern developing, which is actually a bunch of companies have come out to produce indices over the past few years without yet creating spot products on those indices, right? And this is actually a similar design pattern to what we see in TradFi, right? Like the S&P 500, Standard & Poor's is the one that publishes the index and sort of has that definition of what the assets in the basket are, and they update it, I think, quarterly. And then there's a bunch of different fund manager entities that create spot products that reference that index, and they rebalance to try to track that index as well as possible. Well, that's what we're now seeing in crypto. So, there's CF Benchmarks is the indexing company behind LCAP, which you just mentioned. But there's also, CoinMarketCap has a top 20 index, and Bloomberg even has crypto indices, for instance. And there's more and more of these indices defined. CoinDesk has a whole index page as well. And so what we're seeing happen on top of the Reserve Protocol is the creation of spot index products that match those, professionally defined indices. And so, we'll see which ones grow and which ones consumers end up wanting. But it's pretty much a replication of what we see in the traditional markets.
So the construction of LCAP follows a specific benchmark.
It does, yeah. Yeah. So CF Benchmarks, which is owned by Kraken, is an indexing company. That's what they do. And they define these benchmarks. And so the large cap crypto index, ticker LCAP, LCAP, is basically a spot product that was launched by some consortium of CF Benchmarks and Kraken. I think there's some other curator involved that basically just tracks that index product. And you can now buy that on Kraken.com. And so we're really, really excited about that because up until now, the index products built on the Reserve Protocol have only really been available in DeFi to speak of. There hasn't been one of these large sort of broad market indices available to users of centralized exchanges. But we think that people who are using centralized exchanges who have just entered crypto are probably the right target market for a broad market index at this point. If you're already trading on chain, you probably have more opinions about what you want to buy in the crypto industry. And so we're excited to see how that plays out.
Yeah, absolutely. And why is it DeFi rails that will win this kind of sector of index products? As you mentioned, perhaps, Coinbase wants to enter the space, or, obviously Kraken is entering the space to some extent. Why is it DeFi rails that will administer these products?
Well, it's a good question. And the way I think about it is like, there's obviously going to be more and more diversified crypto ETFs. And, we call these DeFi versions DTFs, decentralized token folios. It's like an ETF, but in DeFi. And I actually think it might be that crypto index ETFs get bigger than DTFs in the next year or two, right? Because they're so accessible to so many people who are on the outside looking in, who maybe haven't even been comfortable enough to sign up and get a Coinbase account. But they have their brokerage account or they trade on Robinhood or something, and they want crypto exposure. So, there's a migration over the course of time of people getting comfortable with crypto, trading on centralized exchanges, eventually end up trading in DeFi. And so in the near term, I would, if I had to bet, I would bet that index ETFs might get bigger faster than DTFs. But in the big picture, over the long course of history, it's like we could sort of rehash all of the reasons why it's cool to have stuff on chain. But basically, if you look at like an ETF fund structure, you have like a fund management company, and then the investment company that's like holding these assets and so on. There's all these people involved. You have to have all these regulations to make sure that they behave because they're holding your assets in custody and so on and so forth. And like smart contracts allow us to basically automate all of that in code, right? With a DTF, you're holding a token that is immediately, anytime, 24/7, permissionlessly redeemable for the actual underlying tokens. So you are just directly holding those assets yourself, essentially. So there's, there is no cost of custody. There is no risk that the custodian will walk away with the assets because the custodian is just a computer program. And then you can define whatever approach to governance you want. You could have a fund management company that's like in charge of the rebalancing, or you could have a decentralized governance process, et cetera. There's like a broad canvas to explore there. But so there's all those little efficiencies. And then there's simply the fact that it's a token. And as we've seen with like crypto platforms, it's just so magical that even if you're using a centralized crypto platform, you can withdraw the token and send it to any other platform that's crypto, that's a crypto platform.
Right.
You just can't, it's not as easy to do that. If you have like a Chinese brokerage platform, you can't withdraw your Chinese stock and send it to your, Schwab account in the US just like that, because they're all running on all these different systems and so on. It's all sort of this like archipelago of different tech and so on across different countries. Once it's a token, you can spend it. You can settle your trade finance transaction with anyone anywhere in the world in a few seconds because it's this like single standard that everyone can integrate with. And so when we think bringing it back to asset-backed currency, you could say like, well, Nevin, why not just make a traditional ETF that's like an index of assets throughout the world? We already have ETFs that are like global stock market ETFs and so on. Why aren't people using those as money? And I think there's a bunch of possible answers there, but one is just that like those assets are sort of very restricted in the way that you can use them, the places you can buy and sell them. You can't, it's not easy to walk into, a shop or like go on a website and like pay with something in your brokerage account. Why is that? Well, part of it is just technological, right? Like if those things just were tokens and like every fintech and bank and whatever was able to accept deposit and withdrawal, then maybe people would do a bit more of that. And so, yeah, I'm just really excited for how extremely portable and accessible things are once they become tokens. And in the long course of history, I think that's a major force that will cause capital to migrate from the systems that we have today to these new blockchain versions of everything.
Right. Kind of the combination of asset and currency, where it, can truly serve as a currency. No one's using or SPX or whatever to buy their coffee.
Right.
Yeah. I want to talk a little bit more about indexes, and then I would love to get more into the broad kind of reserve vision. Something that I find interesting is actually last year we talked to Murad. I'm not sure if you're familiar, the meme
of
coin
course
cult guy.
Yep.
And
Smart guy.
I think a lot about the S&P 500 and how the S&P 500 is kind of a cult in itself, right? And Bitcoin is another great example of this too. And they're assets that kind of advocate for themselves. You go on Reddit, you go on personal finance Reddit, you go on Twitter, and people say, they're jumping off points, or the father-in-law tells the son, hey, you got to invest in the S&P 500 or something. They're so like Lindy kind of in a way, right? And I think part of the issue with crypto is that we haven't found one of these kind of Lindy indexes, and I'm not sure 100% why that is, but I think there's a massive opportunity because I want to offer that to someone who comes to me and say, Jack, I want to invest in crypto. And it's like, yeah, what is the jumping off point? Bitcoin, maybe? Doge? Like, it's a broad question. Yeah. Do you have any thoughts on that?
Yeah. I do. And I think that like, if you look at the beginning of mutual funds and ETFs and so on, it didn't happen overnight. It was actually kind of you look back at the early starts and like you find these companies like hustling to try to get, AUM, what we call TVL, doing all sorts of things to incentivize the early participants and so on, until eventually they finally kind of convince people like, hey, this is a cooler way of doing things. And then it slowly builds over time. And I think we're going to see the same thing here in terms of your point on Lindy. There are going to be a few believers who really stick their neck out and decide like, we're going to put everything we have into building what's going to be the S&P 500 of crypto. But it takes a founder mindset to do that right now, because it's not a fantastically popular thing already.
Right.
You have to have a little bit of vision and sort of see like, okay, well, something is going to end up being this sort of consensus asset or index, and then put a whole lot of effort into promoting that. And so, one question is like, well, is it going to be 500 like the S&P 500? Is it going to be market cap weighted or capped? And we see different approaches being taken. Like some people say, well, Bitcoin is too big. And so if you just do market cap weighted, then it's like, I forget the percentages, it's like 70+% Bitcoin.
Right.
And some people say like, let's cap it at like nothing can be more than 35% so that you get more exposure to the long tail to make it a more interesting index. Others take the view, it's like, well, no, the market has spoken. And the fact that Bitcoin is so much bigger is because people trust it more and it sort of has more Lindy. So let's just do a straight up market cap weighting. That's what I personally favor. But on this question of the number of assets that should be part of the index, we see a lot of, we see like 20, 50, and 100 are sort of the numbers we've seen so far for what people are willing to throw into that index. We haven't seen anyone do 500. And when I talk to people, even people on our team about that, people often say like, yeah, you start to look further and further down the list and it's like, what are these things? I've never heard of them. They seem like really crappy and whatever. And so no one is bold enough to say like, yeah, we should have a crypto 500, because everyone's like, I've never even heard of asset number, 180, much less asset number 500.
Right.
I kind of personally feel the opposite. I'm like, look, the market has spoken. Yeah, you don't know what that thing is. Like, do you really know like the 410th company in the S&P 500? Probably not, right? And it's going to be a small slice because, the like Magnificent Seven or whatever is such a huge portion of it.
Right.
But that diversification gives you exposure to like a meaningful part of like the US economy. And in the same way, if you had a 200 or a 300 or a 500 asset index in crypto, it gives you exposure to all the stuff that you don't know about. And some of those things might be the next top 10 thing, right? It's like a lot of assets get added to the S&P 500 and they're at the bottom of the stack. Coinbase is part of the S&P 500. It's not, number 10, but maybe it would be someday. And so getting exposure to that whole spectrum, like I personally would be excited for a crypto 500. There's actually technical challenges with doing that on chain because of all the gas of minting and redeeming for having an index that big. But I personally am bullish on the bigger baskets myself.
Yeah, it's really interesting to me, partly because I see like the top 10 as really just competitive to Bitcoin, right? It's like
Right.
It might have a slightly different risk profile or return.
Mhm.
Like it's a little bit different, but it really, if it's 70% Bitcoin or whatever the number is, it's just pretty much Bitcoin, and
Right.
then has some different characteristics. And when people come to me and they talk about crypto, they're curious about the 500th asset or the 410th asset,
Right.
and they want exposure to that. So I think, and as Bitcoin matures, it becomes a different type of asset, and it's not the same buyer that came here 10 years ago and thought, I'm gonna 1000x my Bitcoin dollar value, but maybe the 410th asset can do that. So
Right.
I think it's a more compelling product to those people that want to enter the space, and they want that upside exposure, and they probably want to take on more risk as well.
The interesting thing about I looked up the other day to see like if you just bought like the Mag 7 or I think it was like a top 10 index in TradFi versus the S&P 500, which one would give you better returns? And the answer is actually, if you just bought the biggest things, you get better returns, at least in recent, I think over the past 10 years. But it's actually more volatile. So if you have exposure to the top 500, you get a little bit worse returns. But because of that diversification, you actually have a little bit less volatility.
Right.
And so it'll be interesting to see if that's how it plays out with crypto as well.
Have you guys studied any of the math? Are there any kind of surprising conclusions about, different baskets of assets that people might not think?
Some other people on our team have looked into that. I'm not familiar with the details myself, but they found like interesting correlations in verticals within crypto. So it turns out like if you do like a sort of like correlation analysis, you find out that like dog coins actually kind of are a bit more correlated with each other than they are with like other random meme coins. And it's wild. Like, why is that? Like, I don't know. I guess the sort of dog coin meme itself is like a thing that can rise and fall, right? So it's like if one dog coin is doing well, suddenly everyone wants to get the next dog coin, and so like all dog coins go up and down together.
Right.
And so similarly, I guess maybe that, I mean, just spitballing, maybe that's the answer, right? It's like you get people wanting gains and saying like, well, this type of thing is going up, so let's invest in other things that are like that now. Maybe that's why you get these sector correlations. But yeah, so we've noticed that. And so that does make it so that you can have, like an index of AI coins. And like that is legitimately a thing where like AI coins overall will rise and fall in popularity as a category. So, you may or may not be right to bet on that category, but you don't have to go pick a specific AI coin. You can buy the AI coin index. And then if that overall narrative gets popular, then you'll do well.
Yeah, that's actually a really interesting kind of concept, because I find with more and more assets, it's harder to express a specific thesis, because like I'm sure there's examples of people, AI has been an incredible narrative. Maybe there's a compelling AI company that's done well, or that hasn't done well, but the index has done well. So it also simplifies expressing a thesis. Or, maybe someone's coming to the crypto space and says, I want to invest in AI, and having a DTF product for them, is a simpler way than having to do due diligence on this.
Right, because it just takes so much time to go and understand all the different, plays at any given vertical and try to pick. So like obviously if you're a total pro, then maybe that makes sense to invest that time. But for a lot of people, the answer ends up being, I don't have time, so I'm not going to buy anything. So we think that might be a reasonable application.
Right. And you see a similarity in TradFi where people express similar theses on an oil ETF or a solar ETF or something like that.
Although I will say, one problem with thematic ETFs that was pointed out to us by a professor who came to Monetarium, our annual conference, he pointed out that the market tends to create thematic ETFs around themes that are already rallying and doing well. And so if you look at the price performance of those thematic index products, it's usually upwards until right about the moment that the index is launched, and then it's on average downwards from there.
Mm-hmm.
And so in general, if someone has just launched a thematic index, in TradFi at least, it's like a generally bad thing to buy because they're probably doing it because of all this momentum, and that's generally like a top signal.
Right.
So that's something to watch out for in DTF creation as well, in my opinion.
It's funny. I saw a Twitter graph that was tracking the price of Rolex Daytonas, and someone was like, "It looks like a good time to buy Rolex Daytonas because the chart looked kind of bottomed." And I was like, "Actually, it's a bad time to buy Rolex Daytona because the risk takers are the ones who buy the Rolex Daytonas, and they outperform Rolex Daytonas while Rolex Daytonas are outperforming." You know what I mean?
Okay, interesting.
And then they buy at the top of the Rolex Daytona chart, and then that's when the price falls.
Is a Rolex Daytona just like a particular type of Rolex?
Just a specific watch.
Oh, interesting.
But I want to talk a bit about the broader vision. You kind of on your copy outline the first step being indexing all of crypto, then indexing the world, and then finally achieving an asset-backed world reserve currency.
Yeah.
Talk to me about this natural progression of things.
Right. So it's like right now most traditional financial assets are not tokenized yet, and so this technology can be used to index stuff in crypto. And then we have believed for a long time, since we got started in 2018, that all financial assets would end up being tokenized. There were years in there where it started to get a little bit harder to believe that with all the challenges with the SEC. But I think at this point, everyone can agree that that's definitely going to happen. Mm-hmm. We see the writing on the wall.
Right.
And so we're waiting for that process to play out. And we have a policy project called the Digital Securities Initiative that is working with the SEC and the Treasury and the industry to figure out a bunch of what the rules and regulations ought to be in order to enable the clean, open, composable trading of these assets in DeFi. And we could do a whole podcast on that in and of itself. But in a nutshell, basically, like the concrete issue right now is that people are starting to issue these security tokens, like tokenized equity products, for instance, that are publicly tradable in the US with the SEC's blessing. But the problem is that they all have their own whitelists. And that's because the issuers and or transfer agents who operate those products feel the need to have the identification information for the end user in order to follow certain laws that apply to transfer agents, for instance, including like sort of mundane things like tax reporting. If a dividend is issued, then that transfer agent might need to have the information on file if the IRS comes asking like, well, who received that income? So we're working on trying to coordinate the industry to come up with a system that makes it so that that doesn't have to happen, so that you can end up with tokens that are more freely tradable. Because one more piece of that is that if you build a DeFi protocol like Reserve, for instance, an index protocol where you want to accept deposits of, say, 50 different tokens, and they're all security tokens, and let's say they're issued by like 12 different issuers. Well, every single issuer has its own whitelist that your smart contract has to get added to for that token to be deposited into your DeFi app, okay? And to convince them to add you to the whitelist, you have to implement the same restrictions as their whitelist on your token holders, so that someone can't basically escape their controls by depositing and then just sort of wrapping with your contract. But now that means you have to integrate like the intersection of 12 different random bespoke whitelists. That's like really technologically cumbersome. And it makes it so that your end token holder of that index has to like go through KYC 12 different times with these underlying issuers.
Yeah, so it increases in complexity the further.
And it basically breaks the open composability of DeFi that we're all so used to. That's so beautiful. And so we're basically trying to work out a system that leads to what's a little bit like kind of a single global shared whitelist, where a user can go through KYC once, and a DeFi developer or a token issuer can basically just opt into this system, and then everything can talk to each other and be like freely composable. And so we think that that is kind of like the big immediate blocker that has to be overcome. And I think about this from a U.S. perspective, but this is a global problem as well. We're trying to get the U.S. to lead on this policy and then do it in a way where we could have many different countries adopt something similar, so you could actually have that composability across countries, so that we have a single global liquidity pool. And that's important to the reserve vision, because coming back to asset-backed currency, we want to ultimately have an index of assets like tokenized equities and so on from all around the world. And so you end up having to, get enough of you don't have to have the same regulations in every country, but you have to have a sort of technological platform or language for those regulations to be expressed in such a way where you can compose those cross-border assets together in DeFi protocols, in lending protocols and index protocols and so on. So we're waiting for everyone to tokenize everything, and we're trying to do some policy work to help them out with that. And then and then there's that end game of asset-backed currency that we hope will eventually reach.
So I think the average kind of crypto, anarchist, or whatever word we're using nowadays, it would say like, just screw the regulation, like let's just either start a company that is decentralized enough so that we don't have to worry about regulatory exposure. Like, why is this not realistic?
Because the financial assets that we want to tokenize are already highly regulated. So a lot of people, when I speak to them about this, they wonder like, well, why can't we just do the same thing we're doing with stablecoins? With stablecoins, the end holder doesn't have to go through KYC at all, only the minter or redeemer. And the thing is that stablecoins emerged in a regulatory void. There just happened to be no rules about them.
Right.
And so they got to the point of like, I think it's like hundreds of billions before, like in the US, before we created a law about them. And so we were kind of forced to create a law that sort of legalized what was already happening. And part of that is they had gotten that big and the sky had not fallen, right? Whereas earlier on in the progression, a lot of people would have said, oh, if you had, stablecoins that were that big with no KYC, obviously, terrorists are going to take over the world and so on and so forth. It's like, well, they got that big and that didn't happen, so I guess it must be fine. Whereas with tokenized securities or other regulated assets, we just have a lot of existing laws. And so all the companies that are doing tokenization today, they're following those laws. And that's why we have these whitelists, for instance. So we're just kind of starting from a particular starting point based on the existing regulations. And to your question of, why not just make it so decentralized or whatever, it's like, well, I guess the one version of that I can think of is some folks have decided, let's just issue these tokens from countries that will allow us to do it without KYC on the end token holder. But you get this weird situation where it's like, this token has been issued in a way where, it's issued out of like, whatever, Liechtenstein or Germany or something, Switzerland. And the token has no restrictions on it, but the terms of service say that like US people aren't allowed to hold it because it wouldn't be legal in the US. And so that just ends up killing demand. Like people don't generally want to break the law.
Right.
And certainly, large institutions and people with large amounts of wealth especially don't want to break the law. And so we think ultimately it really is necessary to come up with something that like the entire regulatory apparatus in society can really be on board with. And I don't think that means that we need to sort of like give up and sort of create a surveillance state. Like we're working very hard to avoid that. And when we think about this system that we think should ultimately govern in DeFi for these regulated assets, we want it to be as decentralized as possible. We absolutely don't want something like the current traditional system where there's like a single entity at the center of the system and there's like licenses for everything. We want it to all be like freely joinable, registration based, not license based. We want there to be like massive competition for every single type of entity in the system. And again, this would be a whole podcast in itself to get into it, but I'll just say that for anyone who's watching this who's like a geek about this, like go to digitalsecuritiesinitiative.xyz and like read our paper and we can talk about it. But like we want a system where the cryptographic roots of trust for the control points in the system are themselves decentralized, and where there's no government entity that has control over the system to say like, hey, we're going to revoke this issuer's ability to issue tokens, or we're going to revoke this DeFi app's ability to transact in these tokens. Instead, those cryptographic roots of trust that do have some governance power, anyone can choose to be a root of trust, and they're just controlled by like law. So governments can say like, hey, we don't like what you're doing, please like delist this group. But that actual company that holds that root of trust can say, I think that's an illegal request. We're not going to do what you say. We're going to take you to court, or you can take us to court, and we're going to sort this out and decide if that was actually a legal ask. Rather than a situation where like a rogue executive administration could act in a very authoritarian way and just exert direct control over the system. So we think that there is a happy medium here where we basically do decentralize the power in the system, but it still does involve controls and some ability to find someone if they've committed a massive crime and actually track them down and hold them accountable more than we sometimes can in DeFi today.
Right. So it's almost like, if you go to some weird jurisdiction or something, you're like letting yourself be bullied. And a better approach is to try to kind of build out a new system or be friendly with what exists, so that so you can address it legally or fight it in court or something at some further point.
Yeah.
That's very, very interesting. I do think this also speaks to a lack of maturity from the crypto space generally. Someone, a company that might be willing to list in some weird jurisdiction or something, because you're right. While the average crypto user might want to, use a decentralized exchange via VPN or something, the average person doesn't want to do that. And if we set that as the paradigm in the industry, then we're blocking off a massive user base.
Right. Absolutely. Yep.
So now we're kind of at the index, at least maybe equities, assets. What does index the world look like, and how broader are we willing to get?
Yeah. So the way we think about it is, Reserve is essentially trying to be the decentralized version of Vanguard or BlackRock, where it's a platform where anyone can create one of these DTFs, we call them. And so if you imagine a situation where all financial assets are tokenized, then you can mix any sort of tokenized equities or bonds or commodities with any crypto assets. And so basically you just get this like single global playing field to compose any of those assets together in whatever way you want. You could have actively managed strategies or passive index funds. You could have, yield focused like money market type products. You could eventually create structured products. So like everything that we see in TradFi, but with a broader universe of the underlying assets. And again, with this feature of each thing is then a token that's like highly portable and sort of transactable around the world. And so that's what we think of as indexing the world. And what we expect over the course of time is a power law. Power law, for anyone who doesn't know, is sort of, you have like, the top things are like by far the biggest, and then you have sort of this long tail of different assets. And that's similar to what we see in mutual funds and ETFs. The S&P 500 ETF is like far and away the biggest. And we expect a similar pattern once you give people access to all assets from all around the world. Maybe 20 years from now, it isn't the S&P 500. Maybe there's some combination that includes Bitcoin and gold and, equities of certain types from, all around the world or something. Mm-hmm. I think that'd be cool. That's my hope. We'll see what the market decides. But our strategy really is to let the market decide, is to create that open playing field and sort of nurture it. And then over the course of the decades, sort of wait and see what that power law ends up looking like in terms of what is the biggest DTF. And when we think about asset-backed currency, one way to imagine this is like, let's say that there was this globally diversified DTF, 10 years from now, 15 years from now, that is the biggest. Well, now you have the situation where you have all these large capital allocators holding that same index product as a token, and it's freely transactable because it's a token. And it's like, okay, if I'm going to do a large like real estate purchase with, from someone in a different country, say, it's like, well, I'm holding this token, you're holding the token. Why would I convert into like US dollars and send you US dollars for you to put the money back into this consensus store of wealth asset? Mm-hmm. We'll just make the transaction directly, right? And so that's sort of the organic path that you could imagine to reaching a point where something like that starts to be used in a transactional way. And we can also go down the road talking about like the possibility of the fall of the U.S. dollar and why it's worth being concerned about that. But I don't think that if the U.S. defaults on its debt and we massively inflate the dollar because we have to print lots of money to cover those debts, or rather to avoid defaulting because people stop being willing to lend to the Treasury. I don't think that like if you look historically at what happened with like the Dutch guilder and the British pound, the past two reserve currencies, the countries that issue those currencies don't switch away from using their own currency. It's not like, oh, we had a hyperinflation event, we're just going to give up on our currency and switch to something else. So the momentum would be extremely strong for the US to keep using the dollar, even after a catastrophe like that. But the momentum for the rest of the world to use the dollar in the way that it does today would be much, much lower. It would be very likely, in my opinion, that the world broadly would switch to using something other than the dollar in a situation where its trust had been violated so massively. And so that's the situation where, if you ask experts across finance and economics what they think are like the alternatives to the dollar in that catastrophic scenario, it's like, the euro and gold and maybe Bitcoin. People like, you see people on TV talking about this topic and they'll mention Bitcoin as a possibility. And we are of the belief that a diversified index of everything would actually be better than all three of those. And our aim in terms of like building the brand and the understanding of this plan is to get to the point where that conversation is like the euro, asset-backed currency, gold, or Bitcoin would be like the things that you would think of as the possibility. And that would really only happen if we're in a situation where, this like globally diversified index of everything is, bigger in size than Bitcoin, right? It's like if you just look at the trillions, maybe it's like the same size as gold or something. And we think that that's plausible because if you look at, again, the way that people actually store their wealth, almost everyone's holding a diversified index of a lot of different stuff. And so the question is kind of like, is the drive for simplicity and exchangeability strong enough that sort of picking the consensus index as opposed to like expressing your preferences more carefully and like investing in specific things, which of those two wins out? But if you look at the S&P 500, that's big in large part because people don't want to make those detailed choices. They want to just be like, well, I just want to be exposed to all the assets, to the whole market. And so that's why we think it's plausible that you could get that progression.
To be fair, people use the S&P 500 as a store of value or as an investment, but they don't use it as a currency. Are there any cases where we have seen people use kind of like baskets as currency?
I don't think so. Not that I'm aware of. I think that's kind of a new idea. So it'd be a behavior change for sure.
The argument would be that the tokenization is what enables that kind of shift.
Yeah. And, and the thing is if you look at it, the past two cases of the world reserve currency failing and transitioning to something else were just before we had, electronic global markets at all, let alone tokenized forms of things, right? So it's like the S&P 500 ETF as a simple global electronic asset is that's a very new thing. So it could be that even if crypto hadn't come along, even if reserve hadn't come along, that in a situation where the dollar fell apart, maybe you would see the world start to use an ETF type product for a lot of those large global transactions. There's kind of a question of people would they go to that or would they go to gold? Certainly, but yeah. So I think that's a good point. But that's my perspective on it. And just one more note there is like we obviously see signs of the world being a little bit concerned about the dollar at this point, right?
100%.
Like the price of gold has gone up a lot. Why is that? It's because a lot of people are buying gold because they're concerned. The percentage of assets held by, I forget if it's sovereign funds or central banks. I think it's central banks around the world. I think we I saw a chart, check this for yourself if you're watching this, but I think I saw a chart where the value that they're holding in gold is higher than in US Treasuries for the first time in like a long time. Pretty strong sign.
Right.
So it's not a totally far off crazy possibility that demand for a more sound store of value goes up quite a lot in the next decade, I think.
Yeah, even, I see it in the US where like family members express more concern about investing in US specific vehicles and are more open to the idea. Like, I don't typically they express it the way they say, I want to buy a house in Mexico or something. It's not as sophisticated as we might hope or that view can be expressed, but I do see that preference coming out just in everyday conversations.
Yeah.
And yeah, it's definitely a real thing. I think about it too, as someone who, I'm involved in crypto, but Bitcoin, has its issues, and then I guess you come around to the whole kind of store of value problem, and that's what you guys are solving. So, yeah, absolutely. But it's definitely more and more relevant.
And I want to add one point here, which is, even though I'm sort of, sort of a doomsayer on the possibilities for the dollar, it's not that I want it to fail. Like, it would be amazing if the U.S. could get its national debt under control and make sure that we preserve the current system. Like, the current system is great in so many ways, and I would prefer to preserve it. And we intentionally designed the Reserve Project in such a way where we can get very big and be very successful as just like the decentralized vanguard and produce all these investment products that would be fantastic for the world and great for us and our token holders and so on, and not have the US dollar, fail and not need to create a reserve currency and so on. We want to offer that as a backup in case the world needs it. We don't want to do anything to cause that. And we even we went so far as to structure our own annual event, which I think I mentioned before, that's called Monetarium, as a gathering for people who want to talk about plan A of preserving the current fiat system and plan B of like, what do we build to have around in case that it fails? Because we really think both of those conversations are important. And yeah, we didn't want to create a situation where we are incentivized to try to create financial destruction, because it would be a very, very painful thing if we went through that.
Well, theoretically, just the idea of like a world currency is benefited by the entire world, increasing in value. And if the destruction of American hegemony happens, then that's going to be bad for any like universal basket of assets, right?
It's true. Yeah. Yeah.
The last thing I want to talk about is kind of like the social problem of creating a new paradigm, because we do see points of consensus, as we talked about, around Bitcoin is a great example, where we have the Bitcoin cult, the S&P 500 is another example, the dollar, right? How do you think about social consensus and trying to grow social consensus around a specific, basket of goods?
Yeah. Well, I think that fundamentally, it's, people care a lot about price, and they care a lot about, total asset size, right? It's like, just if you think about the branding of Bitcoin or any other crypto asset or project, the way you feel about it, the way you think of it, is inextricably linked to its size and its price. And so I think that again, there would be really no way to reach a consensus perception or sort of large scale social trust in such a asset class or idea, other than it getting very big. And so then you have a chicken and egg, though, because it's like, well, no one's going to buy it if they don't trust it. And so I think what we see is just sort of, you can have that sort of chicken and egg play out step by step, over the course of the years. And that's what we are seeing with Bitcoin, right? Year after year, cycle after cycle, more and more people decide that they're okay with it, or that they're bullish on it, or that they trust it, or whatever. And that's a self-enforcing process. And so I think that if we were to succeed at building that kind of trust, or I mean, it's maybe even wrong to say if we were to succeed. It's like, if that trust were to occur, it would be because of that sort of long, slow snowball of like, this institution gets in and this country decides it's a good thing to hold and like so on and so forth until you get to the point where everyone's like, yeah, this makes sense. Right. We all do it.
I talk to a lot of founders and most of them, say I have this one thing I will wake up in the morning and I focus on, or this one metric or this one idea, they're min-maxing on something. Do you have that? And if so, what's your kind of like one biggest focus when working on Reserve?
Mine changes over time, depending on what I've decided is like the biggest obstacle I'm going to try to overcome. So right now, it's definitely this policy landscape question in the US. I wake up thinking about like, oh, maybe it should work this way or that way or whatever. So a few of the ideas like are the things that come, at 2 a.m. and it's like, am I going to remember this in the morning? So that's definitely what my mind is obsessed with right now. And that's just because like, even though the current administration is so pro crypto, there's so many complicated things to sort out that like almost nobody really knows the answer to. So I think we really need to, I also think that we're at real risk of not getting enough done by the end of this administration. And we don't know who the next administration is going to be and how they're going to feel about crypto. I think crypto is becoming more and more politicized because of, it's like anything that, Trump says is good, the other people say is bad.
Right.
And, there's the question of like, is there any bad behavior happening around crypto with folks that are connected to the administration and so on. So I think we have a golden opportunity, and it's like, wow, it's already September of this year, and what have we really got done so far? There's a lot of excitement, a lot of conversations, but like we have some work to do. So I feel an immense, even though there's many years left in the administration, I'm already sweating and being like, oh my gosh, like we have to go faster. There's so many things that we have to work out and so many people we need to get on board. So that's my main thing right now.
When you started out, you just had this kind of vision, and I know it's been maintained throughout the entire history of your company and project. What's the most surprising thing that's emerged out of this kind of founding journey?
Well, the funniest surprise moment was we had a stablecoin app in Venezuela during sort of almost the peak of the hyperinflation there. So it was basically you could get a dollar balance via a stablecoin and thus protect your wealth from the inflation of the local currency. And when we first put the app out, it was like terrible at the beginning. Like the UX and UI were just like absolutely the worst. And yet there was an early adopter population willing to use it. And you might think, oh, it's probably because, hyperinflation is so bad and they desperately wanted dollars. That's probably why they used it. No. These were people who already had dollars in their PayPal account, and they wanted to convert those dollars into the local currency, the hyperinflationary local currency. And they had no efficient way of doing that. They were paying like 12 to 15% with like local brokers to like do these informal swaps.
Right.
And we created a cheaper and safer channel for them to do that. And so we were a vector for people to get back into the hyperinflationary currency, which to us was like completely backwards and like a huge surprise. It turns out that there's a lot of demand to get into a hyperinflationary currency because there's still a lot of expenses you have to pay in that currency. So people would trade in and then like go pay an expense like that day.
Right.
And I think that's just, for me, that was like a wonderful wake-up call and great example of the fact that like you really don't know what the market wants until you start offering things and interacting with your users or would-be users. And the number of times I just hung out with a friend of mine who's a founder yesterday, and we had a conversation about like the exact same thing happened with a huge product that they launched, where it's like just used by like a population they never would have dreamed would touch that product.
Right.
And so I definitely have like way more humility now as to like, it's like, yeah, we have this thesis about broad market index products. We have no idea like who's going to use it and what they're going to use it for and why they're going to use it. We think it's going to be the same as TradFi, but maybe not. Maybe it's going to be, totally different. It's like crypto is different. People trade things differently. The huge growth of perps is like an interesting example. Like that's different from TradFi. So yeah, that's but that particular instance was like one of the funnest and biggest surprises along the way.
Awesome. I think that's a great note to wrap up on. Thanks so much for being here. It's been an
Thanks for
awesome,
having me.
thought-provoking conversation, and I really appreciate the vision.
Cheers. Nice to meet you.
Thank you.